Today's topic is very important, guys. I'm going to talk about Forex correlation. So I'm going to give you some examples of the Forex correlation between all the other pairs. I'll just give you a few pairs, and then I want you guys to make it your homework and do this at your own time. I want you to find the other pairs, how they correlate. Most of this information is there on the internet. You can find it on YouTube, you can find it on Google. It's very unfortunate a lot of people, they don't emphasize on this topic, but this is a very important topic, and every trader should understand the forex correlation between each and every pair. So you don't need to know every pair, but the pairs that you know that you trade, you should know how they correlate. All right, so this is going to help you also to reduce the risk, because in some cases you can think that you are taking one trade or three different trades, when the actual fact is that all those three pairs, they are going to go one direction, or they are going to go separate direction, but it's just good as you are taking one trade. All right, so I'm going to give you some good examples and explain how it affects your trading as well. So before I get started, I want to share with you guys the trades that I sent today morning and yesterday. So if you go to my Telegram channel, for those who want to join the free signals, they can go and check. The link is in the description. You can join, it's for free. I'm also going to share with you some of the trading strategies that I use. All right, so yesterday we sent a signal on pound yen. This signal was sent a little bit late, because the initial buy limit was supposed to be at 14192. all right, and then let's just quickly check on the chart. I also told you guys, like in the ones who are in the channel, I told you that feel free to jump in right now and buy, but use a small risk. All right, because it will be a bigger stop. Because what happened when I was trying to make the trade, to type for you guys the trade, to still put the take profit and the stop loss and the buy price, right, or sell price, the price moved within 5 minutes or so. It had already gone about 20 pips, and me knowing that this is a very good a high probability trade, I had to send it, guys. So I even told you guys that this is a very good trade. So if you check down, I also sent the pound Australian dollar, right? This was a buy also trade. So I'm going to show you also the same trades on the MetaTrader. I even told you here on the pound that the best price will be 89.01, but the time when I say buy, it was already 89.35. all right, so I even told you guys that this is a very nice trade. It's a high probability trade, but I'm not saying put all the eggs in one basket. So don't over risk whenever I say this is a high probability trade. So if you go here, I also updated this signal. This was now 7 January today. You see it right here. This is 7 January. So what happens here, I updated this trade as it has reached 75 pips in profit. All right, so what we needed to do here was just to okay, this one didn't touch our buy limit price, but the guys who jumped in at that price when it was already up, they had a 75 pips in profit. So I'm also going to check right now how far has it gone. So right now there's a bit of a correction that you can see here, but the price is already moved from up here where it was. It had moved when I updated today, it was somewhere around here, around 70 pips. It also corrected here. Now it has reached 115 pips. It's still correcting here. So the reason why I'm saying it's correcting, I know that it will keep on going up, because it's a high probability trade. All right, so let me also just take this time and update the other guys in the group right now that the trade, let's check it out. This pound yen, so this trade is actually hit 115 pips. All right, and it's still going strong. All right, for now. So I'm going to tell the guys to close it if I feel the need that they have to close the trade. Okay, so right now I'm going to update it as it has reached what, 112 pips. The trade is still running, right? So I want to make this interesting, guys, so that can see here, this is this trade is actually reached 100. So the other trade that I sent was a pound Australian dollar. This was sent at 89.35. If you go here, 89.35, which is somewhere around here on this line here. So the price moved so fast that I was not able to catch up. But what I did, I told the guys that the best price to enter is 89.01, which is here. So it actually came back and touched our 89.01. All right, I don't know why I'm saying point because there's no point here. It's actually 1.8901. So this was the best price. So if you go to the chart here, you're going to see that I say, guys, the best price, the best entry price for this one was you can see it right here. The best price for pound Australian dollar would be 1.8901, which is exactly where it touched and then it turned. You can see that it came back and touched here. So if you didn't end up here, or if you got this other opportunity to enter, because I'm sure here you end up with a small risk so that you could be able to take the second trade here. All right, so if you took the trade right here on this this line here, this horizontal line, it's gone all the way up here to 237 pips. So let's find out where was our take profit here. Let's see if the take profit was hit. So our take profit for this trade was 1.9085. 9085. All right, so if you go to our chart here, our 9085 is somewhere just around here, 9085. all right, so the take profit for this trade was actually hit. This was such a small take profit that I put here, but it's still a lot, because this is 105 pips take profit which was hit, and the trade kept on going. So those who ended a bit late, I'm sure they ended somewhere around here. Let's see if there was a different take profit for this one. All right, so those who ended at this price, the take profit would be let's see. Okay, the take profit. Okay, I only put the stop loss, so it means the take profit was the same. So for those who ended right here, they have their 105 pips. All right, 105 pips to hit the take profit here. And then also those who ended a bit earlier, like before the market retest, they had 75 pips take profit which was hit here. All right, so on this trade, guys, you can see that these signals are very powerful and are very powerful, right? So you can see here that I didn't say that it was hit or take profit here, but I just said when I updated the price it was at 112. all right, so the reason why I didn't say it was hit was I still have my open trades here, because I have the trading system. So if you have this trading system, you can actually hold on the trade until I get a red box forming here. That's when I'm going to close that trade. So I didn't update here. I have to tell the guys that the take profit was hit on this trade. All right, so that I don't waste much of the time, guys. And also if you check this one, I think, what was it, let's just check it again. All right, so I don't want to waste much of your time, guys. Let me quickly go over and show you exactly what we wanted to talk about, the currency correlation. So to get to the currency correlation, I want to show you an example just by using this. So if you don't know what the currency correlation is there can be a positive correlation, which means the pairs move in the same direction. For example, when the gold, this is gold, XAU USD. All right, this is a symbol for gold, for spot gold. You can see it here, right? So this is gold. So you can see that whenever gold is moving, going up, the pairs like Australian dollar and also the New Zealand dollar, they will go with the gold. So if it's going up, they'll also be going up. So this is a backup for this security, right? So you know that whenever you get a gold signal there, you should also go and check if there's an old New Zealand dollar out there, so that you know exactly where the direction is going most of the time you find out that 99% or 95% they will go in the same direction. All right, so there's also a negative correlation. This is like the one you get like for different pairs moving, or pairs moving in different directions, right? Like the one for USD and USD CHF. So if the Euro USD is going up, the USD CHF is always going in the opposite direction most of the cases, right? So now that you understand what's the correlation between these pairs, what you need is to design your own strategy based on that. All right, so for this example I want to explain in full how they correlate the AUD and the New Zealand. All right, so and also gold. That's the example that I'm going to look at. So if you go to a gold chart here, okay, what you see here that draws these bars, this is my trading system. When I get a green bar, I buy. When I get a red bar, I sell. So right now there's a green bar here, which is signifying a buy. But I'm not going to talk about this buy trade. In fact, I'm going to talk about it, but I want to first explain something. If we go back on the gold, go back to December last year. It's very fun to say last year, or I don't know, it was just a few days ago. Anyways, if you go back to last year, if you check here in December, it's on 16 December. You can see right there down here on 16 December, this was a bullish signal, a green bar that formed. All right, so if you took a buy trade here, it went all the way. If you have your own strategy, like you'll be collecting or putting your stop losses like below the box, like following the trade, right? Following the trade, trade. Maybe it was going to hit your stop loss here. All right, or if you decide to put just below, since you have already gone so far, right? So this actually depends. It depends on you and the strategy that you are going to use. So me making this video, I want you to understand that there's a correlation between these pairs. So if you go to gold here on 16 December right here, all right, let me just put it like this. All right, on 16 December right here, this was a buy signal. If you go and check Australian dollar or USD, so you should know that most of the time when the gold is going up, USD is going down. All right, so and then Australian dollar will be going up, and then also the New Zealand dollar will be going up. So for this example, let's quickly look at the Australian dollar right here. All right, so that reminds me, I also sent this signal in the group. This signal, I think right now it's about 50 pips running in profit. So let me quickly just go there to my Telegram channel so that I update these guys about this signal as well, so that they know. You can see it right here. This was a sell signal. All right, so you can see I updated last as 35 pips. Right now the trade is actually at 50 pips in profit. So I'm going to update so that my followers and all the subscribers in my channel, it's actually a free channel. All right, they can also know if they want to close their trade, they can do it at their own time or at their own discretion, right? Because after all, you are the one who has to manage the trade. All right, so after this I can quickly just reload this page. All right, you can see now that the signal was updated here as 50 pips running in profit, and also this one was 112 updated as running in profit. So let's quickly go back to our initial plan, which is to show you the current correlation. So on 16 December we saw that the gold was giving us buy opportunity, right? So if you go here, I'm expecting a buy opportunity on 16 December, which is right here. All right, so you can see that this is 16 December from here to here. All right, so what we normally do when we are taking our trades, when it's in this green box, it means we are buying, and then our stop loss, this will be our stop loss. We don't put it here, we put it below the previous box. All right, so that if the price can get in here, wherever we are, we can still buy anyway within this box, right? But now it's so guaranteed, or I can see the probability has gone up, because now the gold also is giving the buy signal here. So it means this was actually giving a buy signal a way back in 4 December here, but this was not a strong buy signal because gold was still in negative, right? So it means between the two pairs, one of them will be in the negative. So like in this case, you can see that this was giving us a negative signal here, but this was not a trading signal. The reason why I say it's not a trading signal, for those who purchase my trading system, they know that when you see a bigger box, like bigger than usual, right? Like you can see in this example, the box is from here to here, the green box, of which this one, it's actually 2 boxes in one. So there was no sell trade here. So this is not a sell trade. So I was just going to ignore this. I know that this is just done to take out the people who had said they are going up. All right, so this is just a stop hand, just takes you out if you put a buy trade, and then it goes in your direction anyway. So here, if you go back again, you can see here around 10 December, this was still a bullish signal, right? So if you check here around 10 December here, this is a bullish signal. I was going to take this one. You see how strong it was, this move from here to go up here. It's because it's also backed up by the gold on the other side. All right, if you go also on the New Zealand here, you see the same thing happening, right? The same thing happened if you go to 10 December here, right? From the 10 December, you see there was this sharp move that went up like this. All right, this is another 100 pips. All right, so if you are trading, I'm going to tell you how you can take advantage of this. So on the 16th of December right here, all right, you know that our stop is still down here, about 55 pips. You take your buy trade here. It first went in the opposite direction about 40 pips before going up. So it ended up going up. You can see it ended up going up to about 160 pips. So it's up to you to close the trade when you have taken this trade. All right, so again, you can see this is a negative, a bearish signal that is forming right here. This is a sell signal that is here. All right, so you can take the trade anyway within this red box. This signal formed when on 3 January here. All right, so you can see that it's starting to move in the down direction. If you go to Australian dollar, you see also the same thing. This is the trade. It also came on what? On 3 January. It's not a coincidence that they are all giving the same signal on the same day. So what you need to do is to look at which pairs are correlating which other in a positive way and which one are going in the negative way. So for this example, I was just showing you that this goes all the way in the what? In the positive way. If this is a sell signal here, you can also go to gold. This sell signal was generated on the 3rd, right, which is somewhere here. Sorry, let's just check here. Okay, this one, when the market opens, it's a jump, but you can see that once you start seeing this negative here, right, we are expecting that the gold is also going to give us a negative signal, which was this one here. All right, it only went about 185 pips. All right, so me, I don't take this trade since there's this big long candle that gives the signal. If I have to take this trade, I have to wait for the retracement into the zone which I would initially take. Like for this example, you can see this green box, it's just a small box, same as this one here, right? Same as here, right? So what you are looking at here, this is we are looking at a sell signal. I'm still thinking that gold is going to break below this line and then we get our sell trade here, right? The reason why I think it's going to break and go below here, there's also another correlation that is there. The pound Australian dollar, it always goes in the negative. That's a negative correlation between gold and the pound Australian dollar here. All right, that's why you see here on the skills, today it's 70. On the skills, the signal that I gave you yesterday, this was a buy signal right here. I also checked here, this was on the skills, this was now giving me a negative, right? So this confirms that this signal is a very strong signal, right? So that's the same thing that happens at the pound Australian dollar. It's the negative correlation of this pair. All right, whenever you see like here, when this was going up like this, I think my alarm is ringing, so let me just see if I can, All right, so I don't want to waste much of your time, guys, but I want you to look at this as a very good example of how you can trade using these pairs, right? These correlations. So if you go here, this thing is making noise and I can't switch it off right now. Let's just see if I can do that. For some reason it doesn't want to switch off. I don't know why it doesn't want to switch off. Alright, so like I was saying, guys, if you go here and check on the gold, and then at the same time if you check here, you see this correlation. This is a very strong correlation that you're going to find here. You see when it's giving you a negative signal here for pound Australian dollar. This was a sell signal on the 2nd of December. If you go to gold on the 2nd of December, that's when that this was still bullish. You see when it started giving the negative on this pair here, on this pound Australian dollar, this one moved very sharply. Like you can see the way it started moving on from the 2nd December here, it just moved about 267 pips, right? And if you keep on going, you're going to see at some point they can be going in the same direction, but not always. And if it's like this, you just know that it's not going to go so long for like, it's not going to move a long distance. It's just going to move a bit and then correct again. All right, so if you check down here, this below here, on 17 December, this is what I want to show you. On 17 December, it's actually 16 December. If you look down here, let's just do like this. So if you look down here, this is 16 December. You can see this was a negative, and then it started trending from there, right? So you see this trend was going down. That's the same thing I was showing you that side, that on the 16th of December, that's when this bullish trend started. So you should know the reason why I'm talking about the correlation of pairs. I want you guys to know which pair goes with this, which pair, right? So you should know that if you get a buy signal here and the sell signal on the other side, the other signal is wrong. All right, so in that case, you know that this is not a very strong signal, because one of them will be losing trade. All right, but if you want to make money using this, you should understand and try to look at the pairs as you understand them, like which pairs you trade. Like for me, you see, I trade mostly the pound pairs. That's why I'm not talking about the correlation between this euro out and like it also started right here on the around the 16th, right? To go down, you can see it went down all the way. I think it moved from here to here, which is about 250 pips. It's a lot if you are trading forex. And then this is the same thing that is happening. You see, this is another correlation. This is the euro out. It's also going up now. You can see since yesterday there was a nice move here. I did not send this signal in the group, so if you guys want to have this trading system, you should also contact me. I put my email address on the screen. You can also just trade some of these signals. All right, so with that being said, thank you for watching, guys. Don't forget to like the video and subscribe to my channel. So I want to make this video very short. I'm going to cut it right here. Thank you for your time and enjoy. Let me see.